Good morning, good afternoon, good evening to everyone joining us today. We've got folks from pretty much every time zone for this kind of webinar discussion around uh, with two founders, one from one from Georgia, one from Pakistan, myself from Sturgeon, and Faisal from Zain. Um, Before we get into the conversation, maybe if we just take 30 seconds to a minute for each of us to introduce ourselves. Aleena, if you want to go first.
Yeah, sure. Welcome to all the participants who've taken the time to join this. Super excited to have you all. Thanks, Robin. So nice to meet you. How do you pronounce it? Is it Gega? Okay, great. I'm
Yes,
glad I got
perfect.
it right. So my name's Aleena Nadeem. I'm the founder of an ed fintech startup called EduFi, which is providing education finance facilities in Pakistan. We were incorporated in October 2021. We've been around for 3 years. Prior to this, I was on the investing side, so invested in a couple of fintechs in Asia. I was really excited about developing the study now, pay later product in Pakistan because no one was doing it then. And it's a $20 billion market that's untapped, and I'm very excited to be able to facilitate and provide higher education to more number of people.
Thank you, Aleena. Gega?
Amazing. Thank you, first of all, for organizing this amazing talk. And Aleena, pleasure meeting you. Robin, thank you. And the rest of the team at Paklaunch. So I'm Gega Tsurtsumia. Robin, I would love to say I'm also from Uzbekistan, as you said, but I am born and bred from Georgia, founder of PayZ. We are building, as we started initially in 2021, a Stripe for Central Asia and Caucasus, Eastern European countries, but it has morphed into more of an enterprise payment platform. So we're more like add-in for the region, and we are helping enterprise merchants like e-commerce, digital products, or any other company that is either entering this region or is scaling across this region to handle payments from more than 100 million local card schemes. This is quite large market of $37 billion in e-commerce transaction volume we are tapping into, and quite young demographic, and we are really betting on this, as we call, middle corridor Silk Road, digital Silk Road, let's say. So happy to be here.
Thanks, Gega. And sorry for getting confused as we were having breakfast together here in Uzbekistan, just to confuse matters. But I think a good example of the opportunities kind of cross-border, which we'll get into more. Just briefly on myself, I'm one of the partners at Sturgeon Capital. We're a London headquartered investment firm investing in transformative businesses across emerging markets. We focus primarily on what we call emerging Asia, which is Central Asia, the Caucasus, and South Asia ex-India. We like these markets because they're kind of large young populations, high smartphone internet penetration, but still very limited digital penetration across financial services, across B2B software, across e-commerce as well. To date, we've made a total of 38 investments across 11 different countries, and very excited to be here and to be joined by such an esteemed panel. And just on time, Faisal, thanks so much for joining us and getting away from your panel at COP. We were just doing quick introductions, so perfect timing.
Sure. Thank you. My apologies for being late.
No problem at all. If you just want to give a quick introduction, and then we'll get into
Sure.
things.
Absolutely. So I'm Faisal Aftab, founder and CEO of Zain Venture Capital. We're an early stage firm investing in Pakistan, and we've done about almost 22 deals from this fund and six from the previous fund. Thanks.
Thanks very much. Look, first of all, I wanted to kind of a question both for Gega and for Aleena. both of you spent time abroad for education and work. I'm really interested to hear how that's shaped your perspective in terms of actually of coming back home to build a company, especially in the financial services space, where when we kind of both of the countries and regions that you operate in have sort of kind of are very financially underserved. So clearly the opportunity is there, but very interested to hear how that shaped your experience, both in the sort of fintech space, but also when it comes to company building as well.
I'm happy to take this one. Start. So there, I think the most cliche answer would be that you see things that are you see the gap pretty much in services or product wise, something that you either utilize it while I was there, for example, or and that is missing in our markets. But I think biggest factor that I can define was that, and I'm a huge fan of Silicon Valley in general, and a lot of things that it stands for, some things that's not, but definitely one of the biggest things is how much it challenges your mindset of like to think big and like not have like limits, like what can be achieved, let's say. So with that mindset, it was sort of my dream to kind of get into YC and like reading PG's essays before. And I think local insights that we had in our region kind of fit perfectly at the right timing, and it kind of all came true in like 2021 when we got there and then kind of utilize that knowledge and all like already in our case it's very well traveled industry, let's say, and well tested, which is payments, but at the same time you need very localized approaches, like for example us calling ourselves a Stripe for let's say former Soviet Union countries didn't turn out the right way because we had to completely adjust our product. So you can't really copy things, but definitely get inspired with something that is ahead in some sense, and actually adjust and make it maybe unique to not just the region but globally.
Maybe just a quick follow-up before Aleena is like you see that kind of that different mindset that you pick up on in the US and particularly in Silicon Valley. I mean, how have you found, I guess, bringing that back home to Georgia, where most of your employees are Georgian and have been sort of based in Georgia for most, if not all, of their lives? Like, do you find how do you bring that mindset, which is pretty unique, even if you look at like any developed market, and bring it back to somewhere like Georgia?
Uh, the biggest thing that I can say is that growth mindset, not just from the company growth wise, but not settling with your existing status quo of personal development, professional development. So that's something that we are trying to achieve in the company, to say that like everyone, first of all, idea meritocracy. So to have a sense of that anyone can bring great idea to the table, doesn't matter your status. And that kind of brings fresh outlook into what we can build. And secondly, no one being, let's say, a done product, like we don't say that. That's why we kind of actually tend to more like fresh, like not too like we had a lot of trouble finding the right culture fit in that sense, but now we are a small but very, very like well-oiled machine as a team. So that is definitely a big part. So that's what I can say.
Having spent time with you guys over the last few years, and for full disclosure, we're an investor in Payzy, but and with the team, I can confirm the small, well-oiled machine fact. But Aleena, I mean, you spent probably longer abroad than Gega did, and interested to hear how it's influenced sort of what you chose to do and how you've gone about doing it.
Yeah, look, I completely agree with everything Gega said. I think if you step back and if I think what is the major differences between working abroad versus, the work ethic here, I think there is a massive alpha delta we can add in terms of culture, right? For example, one thing that we've done in Edufy is I've told the team that before, when I first got started in the first year, we were like, every single team member would bring a problem forward. And I was like, why are we doing that? One of the things I learned at Ventura was like, if you have a problem, come to me with a solution. And oftentimes when they had to think of the solution, they would figure out, oh, they don't really need me. They can figure it out themselves. So like empowering the team members to kind of figure it out themselves and that they have the solutions. And if they really don't, then only come to us, come with a positive and solution mindset. So I think the solution-based mindset to problem solving is definitely a culture that I'm trying to facilitate and trying to bring forth in Edufy. I think one of the major differences also is that I worked in a private equity fund, so it's a larger organization. It's not a mission-driven culture. And I personally also didn't realize the importance of mission-driven culture until I built my own company. And that's been it sounds like something that we've heard, but genuinely having employees that are, Edufy's mission is something that naturally resonates with a lot of people because, we're helping educate the masses, right? It's something that people naturally feel passionate about. And so having an organization where its ethos and core is at that is something that, we're trying to do here. And that's actually a major change, not something I brought back, but a major difference between, working at a larger organization back home. I mean, back in London.
Just to kind of go on a bit more on one thing is like so that sort of solutions focused mindset on one hand obviously makes life much easier as a manager because people don't bring you as many problems. But when you're thinking about hiring folks and you want to kind of instill this, how do you balance, let's say, trying to bring in maybe more people that have a more international experience and therefore perhaps come with more of this ingrained in them, i.e. you don't have to train them as much, versus the kind of local folks that need more of that training, but also have more context on what's important and what matters in the local market?
Well, I mean, I can tell you what we've done for Edufy. I personally have hired always locally just because I believe that the talent wise, we're just as good. And in terms of cost advantages, it makes sense for the company to hire locally as well. And for example, in the tech space in Pakistan, even if I look at marketing side, the Sada Pay, we had a major layoffs in Sada Pay, right? I believe that, we Edufy took a lot of the Sada Pay team members in for the marketing side, and the content and graphic designing skills that team had was, I would say, internationally comparable. So I think maybe for certain functions it makes sense, but we try and hire as many people locally as possible because that's the advantage of developing and growing in Pakistan. I don't know if Gega's had the same experience.
Yeah, I guess if you go into specifics for Georgia, for example, because our tech team and product is there, but we're expanding across the region more like other roles. We had good groundwork specifically for Georgia because you have very strong banking industry and iGaming industry. So that's like a talent pool, let's say, that has been raised. But on a more personal note, I had amazing advice from one of the founders. Who told me like, and it's a very good structure for me to follow. Is that there are two kinds of people: barrels and ammunition. And for you as a startup, as a founder, you are initially the only like you and the founding team is the only barrel, let's say, right? That can be aimed to different directions, while the ammunition should be put in the barrel to shoot the stuff, right? So the earlier you find like directions that some people or indications that some people have skills of a barrel, you give little and little more trust so that you see their action, and once they gain the full trust that okay they can act as an independent entity, then you add more and more barrels, like you try to add more and more barrels so that your capacity to perform simultaneously several things increases. And because adding ammunition is easier, finding the barrels is harder.
Definitely, and I think it's a good point on the kind of local talent is ultimately if you're monetizing in these markets, let's say you don't have a the benefit or the opportunity to be earning, say, dollar revenues in another country. So you need to have a cost base that is proportionate to that. And just as I was about to ask Faisal a question, he's dropped off the call. I just wanted to say, if and when, like then, Aleena, like if you have comments or thoughts or questions for anyone else on the panel, I don't think anyone really wants to be hearing too much from me. It's you guys that they're interested in. So please do jump in with questions. And Faisal, back on perfect timing. I wanted to ask you your kind of perspective on, let's say, sort of internationally educated, sort of experienced founders vis-a-vis local ones, which ties a little bit into sort of solo versus to sort of multiple founders, and what your perspective is, because Pakistan has a lot of founders such as Aleena who've come back from abroad with a wealth of experience, but also a lot of talent domestically. So how you look at that from the perspective of Zain?
Yeah, that's a great question. So I find that the best combination has been always when you get a foreign return founder and somebody who's operated domestically. There's that bird's eye view, a lot of bird's eye view you get when you work in markets abroad, just from a more developed markets perspective. And so there's that lag effect, and founders that have returned, like Aleena and Omer from Abhi, your co-investor there as well. Um, and then you take someone like an Ali Ladubai at Abi, who's operated very well in local, navigated local financial system and banking system integrations. So that combo works out really, really well. And that's the ideal dream team. But in a lot of instances, I've invested in founders that are entirely from Pakistan. What I found there is like really the key element has been, backing founders, not necessarily people like myself or yourself that have, studied abroad. It's sometimes people that come from the middle income demographic that are very hungry and they've actually faced the problem that they're solving. So that's ended up being a really, really positive. That's not across the board. There's people like Danish Lakhani that are building companies also. So that's there's outliers as well. But generally, that hunger element in the local founders is a key. I've personally found that to be a key element in scaling in this tough market.
And when I mean, when you have a team that's sort of kind of purely local founders, which I'm sure there are a bunch of folks listening to this now or on the recording. I mean, what do you find are the sort of key points they're missing? I mean, and maybe it's some of the things we've touched on with Gega and Aleena, but that they don't have the perspective on just because they haven't had exposure to it, and that they need kind of the support of their investors to just to mean that they don't need to spend 12 months learning it by making mistakes, but can actually just be told, look, this is something you should be aware of and you should be factoring into how you're going about solving this problem that you understand very well.
Yeah, so I think South Asia in general, we're very good at being copycats when it comes to music, movies, or just seeing stuff in other developed markets, that lag effect, and copying that. But what's missing is that physical experience of living in a developed market and then understanding the nuances of what goes to really build a company. Um, I won't, I won't harp on macros because I become like the macro overload. But I'll say more. It comes down to, like, let's say if you're, a lot of young founders, aspiring founders tend to go on YouTube and read stuff from really Silicon Valley guys about the content. One of the key differences that I feel like tend to be missing is that there's an abundance of liquidity. So trying to ride and scale a company with that type of liquidity in Pakistan, um, along with the business cycles that tend to be shorter in markets like Pakistan versus like in the US, where at least we used to have 7-year cycles in a developed market like the US. That's another key element to take into account because we tend to roll over in Pakistan. The economy grows, energy consumption goes up, balance of trade, you have a rollover. So those nuances are something that I think you have to spend a lot more time guiding and navigating. And then also navigating, a lot of the foreign return founders have a better sense of identifying funds to target to raise for the next round. So it's also augmenting the fundraising side. Again, not across the board. I've had founders like Qasim from Fave and Omar from Postex. These guys have been able to raise, even though they were, limited international exposure. But generally, that mapping also tends to be missing. So you have to kind of augment that element. I mean, really, these key elements.
Yeah, I think there's often a kind of onus or where VCs can let their side of the bargain down by not necessarily being that clear on what it is they're looking for, and being slow
Exactly.
to say no, which is also, I think, an illness that many VCs suffer from. But
I'm guilty of that. I'm guilty of that as well. I don't know how to say no.
well, I mean, I think we're always kind of a thing for generally for founders is that VCs kind of your job is to be interested in what companies are doing. Otherwise, you wouldn't we wouldn't spend kind of the time and effort doing this. So inherently, we're always interested, but sometimes we're not as good as quick to say no as we should be. But a question for I know for Gega and Aleena as well is. But both of you at the moment, or sort of in the future, are planning on expanding from your core market. And I've seen there have been a couple of questions in the chat on that sort of kind of expansion opportunity. And I guess I wanted to dig into the kind of rationale for both of you because there's kind of two sides to it. One is you're coming from very different situations. Like Georgia is a country of 3.5 million people. That's a sort of district in Karachi. So the opportunity in Georgia is inherently limited, and as Gega mentioned, like you have very strong existing financial services companies. So kind of to build a large business, you have to expand. Whereas in Pakistan, you're sort of going from a large market and looking to expand into sort of additional large markets. So a bit on kind of that perspective on the sort of why and that kind of how you're going about it. And with a particular kind of the fact as fintech businesses, you're inherently more regulated than an e-commerce company or whatever else may be, which throws up additional challenges and often see can be an impediment to scaling. So just to kind of share some of your experiences and rationale, because I know for a lot of folks, they might be thinking, well, should I be expanding or should I not? And a bit on your experience.
Sure, I can address that. So Edufy is
Well,
definitely focused on continuing to grow in Pakistan, but I think the way we're thinking about this is that once you built your core tech, whether that's like your loan management system, whether that's your app, whether that's your scoring, then you realize quite suddenly that that can be applied to different markets where you can also earn dollar income, and that differential is extremely attractive, right? Once you've done it in one market and you know basically the handbook on how to launch something, you feel that other markets are not that difficult to tackle, right? Like we've done the regulatory framework in Pakistan, we've built the tech now. We're going to continue growing in Pakistan, right? Like our mission is very much still to continue growing the portfolio in Pakistan, but it's just so easy in terms of the increment required to get from the sales and distribution side is all that's needed because we've already developed the tech. So when you can earn 10x revenues, why would you not do that? Is the question. The question is not why would you, the question is why would you not? Right. So then the question comes on to the regulatory framework, which you're right is a big hurdle to fintech companies, but there are ways around that. With partnership with banks, other such structures which help you facilitate, away from that. I think also, founders are really a byproduct of the market capital. Where the capital goes is where the founders follow. So actually, we're not leading the decisions. The LPs of the funds are leading the decisions. If they're more interested in a certain region, the founders will eventually have to gain exposure to that sector or that region in order to raise. So I think, in Pakistan, as we already know, the tech sector had a boom in 2021. It's going through a little bit of a period right now, but hopefully, we're with the interest rates coming down now, we are seeing that, that cycle uplifting again. But the capital is flowing in the Middle East. And it's just such an easy corridor for all Pakistani founders to, not consider because it makes you so much attractive. It opens up 300 more VCs who would potentially not have just been interested in a Pakistan play. So that's how Edufy is thinking about it. And I think we work in the BNPL space. We're basically SNPL, study now, pay later for the education sector. And it's been two of the biggest unicorns have Tabi and Tamara, as you already know, are in Saudi. So it's also about market timing. The market is understanding our product now, right? And so there's like this quote that I read, there's nothing greater than an idea whose time has come, right? I don't know if you guys have heard of that quote. So it's about market timing as well. So if the Middle East is ready for my product, it has higher revenue potential. I've built the tech in Pakistan. We figured out licensing, and you continue to growing in your primary market. You're not giving up on that. I feel like that's kind of like a win-win for us.
I mean, you have a slight, you really highlighted what can be both an opportunity but also a challenge of kind of the tail wagging the dog of sort of VCs pushing founders to conform to some kind of mandate, which ultimately is the tail being wagged by the LP tail that feeds it. But it can be a challenge, and oftentimes I think even a frustration for VCs when might say, well, actually the opportunity in this market is really exciting, but I have some restrictions to my mandate that mean you need to come to me a little bit before I can come to you.
Yeah, for sure. And I don't think I think it's a bit of a chicken and the egg. And I don't know if Gega or other founders, my founders always face this problem, right? Like there's this meme I also saw, which is like the CEO looking at the CTO looking at the CEO selling something they haven't made. And it made me laugh today because I was like, that really happens, in a founder's life, it's a chicken and the egg problem. Even with raising capital from the Middle East, you have to show traction in the Middle East, so it's before you can actually raise for capital from the Middle East. So I think it's a chicken and the egg problem, but that's, one of the issue, not problems, but things that all founders, are working through.
Yeah, I can share my perspective, which is a bit different because being from a country that is just district size of Karachi, it's a blessing in disguise that you have to think about scaling day one. There's no alternative, and as a tech startup raising venture funds, right? You have to show the growth. So that's the first part of the question. Secondly, I think we a bit to think about it retrospectively, we were a bit late scaling. I mean, we decided to scale very soon, but we had to move really faster and have done this earlier because we should have gone, and Uzbekistan was the right bet, in my opinion, in our region as a second market. And in Uzbekistan, we should have moved there a bit earlier, maybe a year earlier fully, and then we should have and what we are doing right now is that honing down the product and our fit, and then because our business is B2B, a bit different scale as well, different beast as well. In my opinion, one of the biggest things, and I heard this quote, I think it's from Justin Khan, is that first-time founders obsess about product and second-time founders obsess about distribution. And as a first-time founder, I have done my fair share of obsession, and I agreed with Aleena that we would sell something that the tech team has not yet developed and oversell, let's say. Now I think focus on having as much distribution together with our merchant network and listening to them and growing together with them is the key. So.
Faisal, any thoughts from you? I have more questions, but I want to give space
Sure.
for others.
So I guess on that, I mean, I get this question all the time from founders. Like, VCs behave in herd mentality, and so do founders. And when they see one company expanding to the region, everybody's thinking about going to the region. So what I always tell them to go and there is some sense in doing that because one is obviously, currency devaluation tends to deter a lot of investors. So if you can dollarize some of your revenue, it tends to give more confidence to investors. But not all products make sense for expanding regionally. So if there's a market gap, let's say, generally a lot of Pakistani companies tend to expand in the GCC region. And I mean, if you're entering in that market, it's probably not the best to expand your product because there's no fit over there for this particular product, or try to just come up with a feature to enter that market. So I do think Pakistan is a massive opportunity. And if you have the patience, eventually the country to me is the same opportunity as China 2006, India 2016. It's just a matter of when they start demonetizing and digital payments pick up. So, but so I always kind of guide them with that mindset. With that said, about 6 of my portfolio companies have now successfully entered Saudi and UAE. And you're one of them you're very familiar with. You're actually a bigger investor than Ali. So, there is sense in some of them when they can crack it, but I do discourage them because if you don't have the dry powder, it's also very costly to scale in those countries. So why mess with the home base Pakistan in trying to just dollarize or expand just for artificial growth? So that's generally my advice.
Yeah, I think there can be a challenge, let's say, when it can partly be a function of how much capital you've already managed to raise. Like some companies were able to kind of time it well when sort of 2020, 2021, when there was a lot more appetite for emerging markets in general and also Pakistan, that gave them a war chest such that you could afford to think longer term and not be pushed into doing it. Whereas other companies have perhaps said, well, if I don't do this soon, I potentially might run out of money. But speaking to someone related to Kaspi in Kazakhstan, which for those who don't know is a sort of $20 billion business in a country of 18 million people that does about $2 billion in free cash flow a year, kind of fintech, e-commerce, super app with 75% of the population as monthly active users. Like it's a phenomenal example, and they've only recently started expanding. Like they had an attempt in Ukraine before the Russian invasion. They've recently just acquired Hepsi Barada, which is the second largest e-commerce player in Turkey for 1.1 billion in cash, raising new money. But they really consolidated their position at home before ever looking abroad. And it kind of ties into that question of when is the right time? Like, should you be expanding if there is any doubt in your mind that you are the market leader at home? And if someone else came along and was 100% focused, could they disrupt you? Could they outcompete you? Because my sense is a little bit is like, you don't want to wait. You don't want to run the risk of waiting too long to expand. Gay was kind of highlighting like that can have a negative impact, but also sometimes if you go too far too soon, forget about your domestic market, and actually someone else comes up who could potentially supplant you. And again, this is not a hard and fast rule. There's not a sort of amount of revenue or an amount of market share, but interested to hear kind of folks' thoughts on that as a kind of decision that one has to make in as part of a much bigger decision, which is to expand in the first place.
Is that for me, Robin, or everyone?
That's a general one. I expect with having had multiple companies in the portfolio do it, I think your opinion will be
Sure.
right.
I'll give an analogy. And so, you always use the analogy. And by the way, Kareem is a great company. It's a regional powerhouse. It still is in MENA, but when they expanded to Pakistan, Egypt, and multiple other territories. And then when the competition came, you see InDrive and Yango really eating into the market shares in markets like Pakistan. It's almost like, you almost have to think of it like as a military strategy when you're expanding. These are brigades, you're sending it to different regions. And, you have to really measure your supply and resources before you actually enter those markets and make sure, the idea is, as you said, not to lose home base, right? So we have examples of powerhouse companies that have basically lost market share or had to retreat basically to hold their home base and, retreat from big markets like Pakistan. So I'll give the floor to somebody else, but I just add that in.
Yeah, look, I can add on to that. I think you're 100% right, Robin. Like literally you said what I have been thinking for a long time is that it's always a give and take. If you wait too long, someone could eat your lunch abroad, right? If you expand too fast, you run the risk of someone eating your lunch at home, right? But I think that the way I think about it, and I think even if you look at Silicon Valley, there's 50 startups going after the same idea. The one that wins is purely execution, right? And that's literally all that matters when as you know, building a company, the best executor could win. It doesn't matter if you're studying from abroad, it doesn't matter whether you went to MIT, it doesn't matter which class you come from. It just matters of how hungry you are. And I also read this other, I've been reading a lot of books lately, clearly, but it spoke about how, you know, entrepreneurship is really just a test of resilience. Like, it's the last man standing. You just have to stay alive for the longest time, and then I feel like that's gonna be the one who wins. So I think, you know, if you're able to set up a structure where you're able to execute in a sustainable way and balance all those things that you've mentioned, then you know, you're in a good place. For us, we did not raise in 2021, but I think that if you're able to show enough traction in neighboring markets, by having a strong team back home, keep the fort strong, you will be able to, you know, raise the necessary capital, and then set up a team there. But definitely, I think that the way we think about it is that if you don't have the capital, then it doesn't make sense to expand, because resource costs abroad are, when I've looked into it recently, is shockingly high. I was quite surprised by this. I mean, you know, it's expensive, definitely an expensive feat. I don't know if Gega, you've how you're thinking about it, but those are definitely factors that one has to consider.
I definitely agree. For us, the difference was, and I agree with that, that eating lunch at home, if you don't, I guess when your market is as big as Pakistan, you have to figure out first the product on your local market, be a dominant player or at least one of the key players, and then start thinking out about scaling outside. For us, it was day one we had to think because of how small our market was. So for us, let's say Pakistan is Uzbekistan where we are, and where we won't scale from Uzbekistan until we are very sure that we are in a spot where we can, it's a repeatable growth, you know, like, and we can grow on top of what we have, and we have enough capital to actually digest the growth. But at the same time, the focus is the key for us right now.
Yeah, in some ways, having folks copy you you're really a victim of your own success there. And it's what is it? Imitation is the greatest form of flattery, or something like that. And probably look at someone like Kareem's success, spurring others to try and do something similar. And there's also a key point that for kind of folks listening is, I think, if we're kind of speaking a lot about lunch, even though it's dinner for most of us listening. But you being in a large enough market that it is significant if you win is key. And as Gega said, there is like Georgia as a market on its own is not going to deliver venture scale returns for investors. Well, one final point that I think is important, we're sort of speaking about this kind of uh, copycats and sort of competition, is if you're, and this is not so much for Gega and Aleena, but for others listening, is like if you're building a business in a vertical where there is already someone in your market who has got attention in the form of fundraising and publicity, even if their execution is not as strong at this point in time, or they've got distracted and you think there is an opportunity, you really, is that me who loaded the whiteboard? I don't think it was. I don't know what's going on here. Can everyone still hear me? Oh, it's gone. If you're going to compete against someone who has publicity and who already has a market presence, when you're raising funding from investors, you really need to demonstrate, to Aleena's point, how and why you're going to be able to execute better than the incumbent, and kind of how and why they are distracted and why there is an opportunity there. Because as InDrive and Yango have demonstrated, you can outcompete the incumbent. In some cases, as a function of the business model that you have being superior to theirs. In other cases, being just your execution being better, often a combination of the two. So that's a very important thing to factor into any conversations that you have with investors. If there is already an established, well-known player in your market that's doing a similar thing to what you're doing. And the sort of classic, like, whatever that's sort of four quadrants, and you're always up and to the right, and everyone else is rubbish. Like there needs to be a bit more nuance than that, especially if you're speaking to someone who understands the market that you work in. One point I wanted to pick up on that I saw in the questions was on the regulatory environment for you as fintechs in your home markets now, so not looking so much at expansion. Like, is it something that is supporting you? And there's maybe someone from the regulators listening, so let's say nice things maybe. But do you find it sort of improving and evolving? And where are the gaps or the sort of roadblocks which are the sort of biggest challenge for you at the moment, or which, if they were solved, would be a real catalyst for your own businesses, but I guess more broadly for fintech startups as well? And Faisal, if you have any other ideas on this, we're interested to hear.
Sure. So I've got a bunch of regulated entities, both from the Securities and Exchange Commission of Pakistan on the NBFC side, including EduFi. And then there's regulated state bank regulated ones, which are EMI and PSO, PSP licenses. I think the regulators are generally fairly forward-looking in Pakistan. They're very supportive. But at the same time, when it comes, and this is all when it comes to issuing the licenses and you put in the fees and everything, and eventually it gets issued. The problem starts to arise sometimes is that one I think they issue too many licenses, not realizing that if you have 50 digital banks, for example, nobody's going to be competitive, and if you charge a high fee, so that's something that we keep in mind in terms of when issuing these licenses. And then the other subsequent thing is also just the ongoing regulatory oversight. Sometimes it can become a little bit interpretation of certain language when you're trying to expand as a fintech. That can cause issues. And then obviously as tech companies, these companies have to scale rapidly. And sometimes clarity on one regulatory word can take 6 to 9 months, which can obviously that's really difficult, right? But overall, I mean, to be honest, it's the framework and having dealing in multiple jurisdictions just as a fund and seeing the changes in private fund laws. Pakistan is actually pretty decent when it comes to that side, but I'll let the founders speak because their experience, mine's always coming from the board. They actually go through the actual arduous journey of dealing with them. So I'll let Aleena or Gega speak.
Yeah, it's tough one. I would say that if you can avoid building a startup without regulations, do that for sure. Because it's just extra. You have so much to worry about with everything going on, and plus you have the regulator. So doesn't matter how good the regulator is, and we have had luck to work with good regulators. Still, it's a regulator, and you probably initially don't know everything, like from fraud to like security to anti-money laundering to like in payments. Moreover, it's like every aspect almost KYC and KYB and everything, right? So my advice would be if you are starting a fintech startup, at least unless you have a lot of like strong funding, going in a regulated world is super, super tough.
Yeah, I would like echo everything Gega said, but in our experience, there's always a silver lining. I try and be positive, and the regulatory landscape is actually a huge barrier to entry to people in our business, right? And so it really stops competition coming in. Genuinely, it does. In our experience in Pakistan, we are Pakistan's first education finance company. So we created a whole new product with the regulator, who is SECP, Securities Exchange Commission of Pakistan. Actually, for us, they've been extremely positive and helpful, and they released a regulation in around 6 months ago, saying exactly what lending apps in Pakistan need to do, and it was a quite detailed. It was Circular 21B, and it listed out literally every single button that a loan app is allowed to have and which one isn't. And we were one of the first apps that were compliant in the market. And once you've built that kind of rapport with the SECP, they're extremely lenient and very helpful. Another regulation that came in with that was existed in Pakistan was that no founder or you cannot be the CEO of an NBFC, non-banking financial company, unless you have, I think it was like 2 decades of experience in a finance role. Now, that's a ridiculous, clause because founders of startups are generally much younger and they have to be the CEO of the regulated entity, and it should be based on your experience, not just number of years. And so we actually got that changed, and we were able to bring a case forward to say that this regulation doesn't make any sense. And for Pakistan particularly, let's look at what NBFCs are doing. NBFCs are bringing global capital to the domestic market. So the government is trying to push that, and promote NBFCs. And so we've actually been riding that wave of positivity, and they've actually been quite great in that end. So that's been Edufy's experience with regards to regulators. But we're on the other side of that now, which is that now that you've gotten regulated, now we're happy because other competition can't come in as easily, and we're good. But definitely the year and a half when we were working with the regulators, it was definitely slowed down growth, but now we're past that.
Yeah, as you said, the long term is a moat for you as a business, and I think certainly when we're underwriting a potential investment opportunity, we are attracted to complex industries because the problem tends to be bigger, and therefore the sort of potential upside tends to be bigger as well. Now, if that means you go slower in the short term, most people will be put off by that, and they'll go for a simpler opportunity and or just be unable to work with the regulator. And I think that's something where having the right investors on board can help. Someone, if they and board members, not who don't always have to be just your investors. I think especially as a fintech, I think when we met in Lahore the other day, you were telling me the kind of senior individual that you bring on, the kind of grey hairs, 20 years experienced individual who's not going to be a CEO but does know these regulators on a personal basis and can bridge some of that gap between the exciting thing you're trying to do and the protection that they are there to provide to individuals and businesses that you want to provide services to.
100%.
One point which is maybe helpful for folks listening is whether you're actively fundraising or not at the moment, I will leave that up to you to kind of say, but you're obviously engaging with investors on a regular basis, both your existing investor network or sort of your existing cap table as well as potential investors. I mean, what's the kind of change you've seen over the last 12 months in terms of perception of startups from Pakistan and Georgia, respectively, and investors' appetite to be allocating to these markets? Because I think for founders listening, it's a very important perspective that perhaps they don't necessarily have access to.
I froze for a moment. So
Yes,
capital
same here.
allocation for a region or
Sorry, maybe that was me that froze. The perception of investors, the sort of VCs that you're speaking to about kind of your markets as an emerging market, and also their kind of willingness and ability to actually invest, how that's changed over the last 12 months, and what you're kind of expecting or hoping for in the next 12 months.
I'll start because I asked. We are in fundraising mode, so I can say this. So it's completely different from our seed round, which was in 2021, which was also it was YC related, which was it is probably an anomaly because of a lot of different factors, being the 2021 hype overall and being having this YC hype at the same time. So all of this brings a different let's say reality. Right now, what I'm seeing is that a lot of American VCs don't look at this market anymore. Majority of them probably. I think one of the biggest factors to look into is specialized VCs. which are like fintech oriented. And I have high hopes, and I see this already with Sturgeon being, from our standpoint, one of the premier ones that are, let's say, Western VCs who are targeting this market, this region, let's say, or emerging markets in general. So I think the hype machine, unless you're in AI, has died down. And if you're doing really well and if you show good traction, the funds will be there because the funds are there. They have to be deployed.
Faisal, maybe a question for you, and this kind of also, and to sort of same question, but also extended to you and I are always speaking to our existing LPs and prospective LPs, and I suppose for the context for founders is our ability as VCs to invest in you is not just a function of how good you are and how excited we are about your business, but also our ability to sell these markets as attractive investment opportunities to our LPs. So I'm very interested to hear your perspective.
Yeah, so I definitely agree the market has changed significantly. Um, from an LP perspective, I would say the smaller LPs, family offices, pretty much everyone was overexposed to tech and VC in 2020 and 2021. And everybody got very exuberant. You have more DFIs stepping up now, coming in, filling the gap. The American VCs, which are investing from their 10% opportunistic allocation, most of them are not as interested. And primary reason is that with AI or AI bubble or AI, I think it's here to stay in a big way, but it could be in a short-term bubble. But the returns you can get there, the reason why they come to these frontier markets like Pakistan is that they expect outsized returns and potential growth of these markets as they digitize. I think that opportunity now potentially exists in the home markets by investing in AI use cases. So, capital has definitely changed. And with that said, and also from an LP perspective, the type of LP mix is more institutional. My fund was actually more institutional LPs than individual LPs. So generally, they didn't get shaken too much during this period. But the individual investors, especially like the angel investors, usually expat Pakistanis that wanted exposure in Pakistan with a $250,000 check, you're seeing a lot more of that capital dry up. So I don't think it's that easy for VCs to raise 50 million plus funds anymore. I think a lot of VCs, when they're trying to raise fund two, your fund two or fund three should be higher than the previous fund. But I think they're seeing that it's not that easy to get about 20, 30 million. So that's going to impact the market. And then, but what we are seeing is a lot more strategic investors step in. So, it'll be like seasoned companies like the one you mentioned that looking to now enter Pakistan, or not that particular company, but companies like that. They'll come in and do acquisitions in Pakistan of players that are in their pre-Series A or Series A level, where you have product market fit and traction, and they're getting deals. What for me, I mean, I'm basically counter-cyclical anyway in the way I invest. So, I think VCs also have to start thinking, you don't just invest in hype, just like you don't invest at the peak of the market in the stock market. We should actually use this gap and be opportunistic and build positions and invest in companies that are healthy and scaling. And it's really just the liquidity drying up that's causing a lot of these companies to potentially turn to zombie companies or to fail. So that's a new type of opportunity. So you have to go back to the drawing board, come up with a new thesis, and I think there's always a case you can build for investors. You just have to justify that case based on the revised landscape. And I personally, I'll wrap it up with this, that I personally think the landscape is going to stay volatile with interest rates over the till 2030 and possibly even beyond. So we have to think very differently from 2010 to 2022 as a playbook for VCs and startups.
Yeah, I think your point there on the let's say the returns that investors expect. Inherently, you are taking much more risk in emerging markets, and I mean, the sort of typically a larger fund does a lower multiple on invested capital, which is fine if you're sort of a big fund, like your investors are big institutions that have allocated large checks. But when you're measuring it up against the risk they're taking in these markets, it sort of sub 5x is not really worth that risk, because I mean they can do that they can do that pretty much in a private credit fund if they've got a long enough horizon, potentially in some countries, private equity, these assets. And I think from the kind of founder's perspective with that is to understand that VC funding is very expensive because of the expectations it has about what you can achieve. Sometimes it's not necessarily the right money for your company. There are opportunities that are large enough that can deploy enough capital with a high enough rate of return to make money for VCs. But in other cases, maybe it's not quite the right fit, and that's a nuance that I guess you can develop an understanding by speaking with investors and also other founders as well. But just quickly on our experience fundraising over the last 2 years. It kind of, I'd say, beginning of this year, sort of momentum had picked up again with LPs, but the last 6 months, effectively building up to the US election, it was very difficult to get someone to take a decision because they just wanted to wait and see. Wherever they were based, wherever their sort of kind of core assets and funds were derived from, everyone was waiting to see who would win and what the implications of that might be. And I think, or well, clearly I hope, because like other folks fundraising, that 2025 will get easier. But I think why I have that hope is that whatever your view on Trump is, and that's we do certainly do not have time to go into that discussion. We now have a degree of certainty, and investors have a degree of certainty. And for some people, they'll say, you know what? Like Gega was saying, is like, I'm a US investor. I have no interest. I think the US is going to be on an absolute tear for the next sort of 4 years, and I'm not going to put my money elsewhere. But other folks will say, well, hang on, I don't feel like I'm really welcome in the US anymore. And then my money would be better deployed in a market that's closer to home and one where I can have better understanding and influence and maybe add value as well. So where it be challenges in some cases, I think it'll also be opportunities in others. I'm conscious that we're close to the hour mark. I've been trying to pick up on a few of the questions that have been coming up in the chat. I don't know if Gega, Faisal, Aleena, if there's any of those questions that you particularly wanted to answer, or any of the topics we've touched on that you feel we could kind of add a sort of closing remark on. Otherwise, I think we have a couple of minutes left, so kind of open the floor to you three.
Mhm. I'm on a mobile device, so I don't know if I can read the questions. So I'll leave it to Aleena and these guys.
Well, I'll just answer the one question that came for me particularly. It says, will you provide loans for students planning to study abroad or institutes such as MIT or others? So this is actually a product that we get so much demand for. Everybody, I mean, daily we get, north of 100 requests of people wanting to study abroad. So I believe we should always structure products where there's a demand, right? Because then you're not, you're building for something, a problem that really exists, right? But I think the fee challan, or like the fee bill for universities abroad is obviously very hefty. So I feel like that's going to be more of a Series B type product that you have to create, where we've raised a bigger chunk of capital so that we can structure this product properly and get the proper debt funds in partnership with us. So we are working towards that product, and hopefully we will be able to launch that in the future.
Okay. Gega, was there anything in any questions in the chat that particularly stood out to you, or maybe we've covered them already?
I tried to answer those with text while you guys were talking, so
Brilliant. Thank you.
at least the ones that I could answer.
Okay. Thank you for doing that. One point that I saw just come through is on the kind of Delaware holding company, which I know Gega, you have Delaware, Aleena, I don't know where yours is, but it's a point that we do not have time to go into now, but it is something to be aware of, as if you're building a company outside of the US where your exit is likely to be outside of the US. It's something to seriously consider, not so much from a legal perspective. You can have kind of full faith in Delaware law, but more from a taxation perspective and withholding taxes that you as founders and your investors could or would be liable for. So it's a point for maybe another discussion, and Ali can maybe note that one down. But the risk of uh, facing a bit of a tax bill if and when you are successful. But putting that to one side, thank you so much everyone for joining. Aleena, Gega, Faisal for your input. Hopefully that has been interesting for folks. And I mean, maybe one final thing, if people want to get in touch or sort of ask questions, point folks in the way of LinkedIn. Is that the best way for someone to connect and follow up with questions? Seems to be kind of nodding going on around
Yeah.
the.
That's it, or a warm introduction. Just find someone that's 1 or 2 degrees away, and because we get pinged by so many random, like solicitations on multiple feeds, it always helps when you know someone. So like Ali Fahad, for example, have him send. If you can get to Ali Fahad these days, given that he himself is pinged by everyone, have him introduce. That's the
Yes,
best
and
way.
for me, I'd say the strongest one is if it comes from another founder, especially a founder that we are invested in, because I tend to think more highly of the founders we're invested in than almost anyone else. And if one of our founders says to me, you should really speak to this person, I'm not even asking what they're doing. I'm gonna take that call. And you can find our portfolio companies on our website and get an intro that way. But oh, look, thank you
Robin,
so
sorry,
much.
somebody, I saw one question pop up. Someone said, how to
All
get a
right.
warm introduction? It's very easy. Just go to LinkedIn and see who's connected to one of us. And maybe if you know them and who's a common connection, maybe ping them. That's a warm introduction.
And then advice, have a ready-made forwardable email to make this guy's lives easier, who's making the intro, because no one wants to
Exactly.
research. No one has time to research your company and do the work for you. So make it as easy as just a forwardable email.
Yes, exactly. And you you
100%.
you know you know your company best, and you should sell it best. We can always top and tail an email for you, but yeah, the core of it should come from you. Look, thank you so much, everyone, and a final thank you to Ali for arranging all of this. As always, a superstar who seems to do more in a day than I managed to do in a year.
Thank you, Ali. Really appreciate it. Thanks, Robin and
Guys,
everyone.
thank you. Pleasure.
Pleasure. Thanks.
Take care. Thank you, everyone.
Bye bye.